We got some further evidence today that the second quarter GDP, actually, while positive, is still a bit challenged. It's Friday, July 25th, and this is Markets with Megan. If you like this podcast, please subscribe and hit that alarm bell. Also, you can always share this with friends, family, colleagues. What we want to do is break down the economic data that we've received this morning and what does it mean for economic growth. And what we received this morning was the preliminary reading on durable goods orders. And we focus on this because there's several components of this report that are direct feeds into the GDP number that we'll get. And keep in mind, next week we'll get that advanced reading of the second quarter GDP. So let's dig into these details that we got for the month of June. First of all, the headline number, which includes all of the goods orders, that means airlines, defense, this actually declined. It was the biggest drop we've seen since the pandemic, since 2020. Now, to put that in perspective, we also saw a pretty big increase in the prior month, so a drop is not that surprising. However, what we dig apart the details, it's showing us that there is some challenges due to the uncertainty around tariffs in business spending. So when you exclude out the non-defense ex-aircraft orders, this tends to be a leading indicator for GDP because keep in mind, these aren't firm orders. They can be canceled. That actually declined for the third time out of the past 6 months. It was expected to be positive, but it actually declined 0.7%. Now, the most important number in here is the actual shipments. So what orders have been placed, have been fulfilled, and have actually been shipped. That number is a direct input into that GDP that we'll get next week. And we saw that rise about 0.4%. So you are seeing some modest growth here from a business spending perspective. Now let's look at where this is being concentrated. Aircraft orders tend to create a lot of volatility around that headline number. When you look at non-defense aircraft orders, there was a lot of it placed in the beginning of this year. They were up 231% in the month of May, and we did see over a 50% drop here in June. So that's not too surprising, can be highly volatile numbers. When you look at some of the other areas, we're still seeing some investments being made here, whether it's orders on vehicles, orders on electric equipment, machinery. These things are still growing. So we are seeing some CapEx spending from businesses. It is a bit challenged here because there is that uncertainty around what will happen from the trade deals. Again, next week's a much bigger week. We'll get that first reading on second quarter GDP. We'll also get to the jobs report. We will get personal income and spending. There's a lot of earnings. We'll get the Fed's preferred inflation reading, the PCE core, and then we will get some more information on home sales. But the big thing will be the Fed meeting, which takes place in the middle of next week. And we don't expect the Fed to be making any changes at this policy meeting. Instead, we think they're going to probably let people know that September's not a done deal either. That's all we have today. If you like this podcast and want a history of it, you can go to marketswithmegan.fm. Thank you.